Well, first off, Happy New Year, everybody. I think a couple things that are on a lot of people's mind and what Sean and I will kind of talk through today is first, Sean, give us an idea of how the markets performed in 2020. A lot of media, a lot of noise, especially in defiance of a pandemic. There was a recession, political upheaval, which we might still be going through. So give us a little rundown of how the markets performed ending this past month in December.
Yeah, so the markets in general for the year had a great year. It's really hard to believe that. We went through one of the fastest market drops of all time from February 18th down to March 29th. It happened just so quickly with the coronavirus, the pandemic going on. A lot of fear and uncertainty at that time. I can remember March 17th, my birthday, just seeing the markets drop and just hoping that clients would listen and stay invested. We came out with webinars during that time saying, stay invested. A lot of people at that time, I had talked to even advisors that had sold and ran to cash. People were scared. We saw the US Treasuries do really well through that first half of the year. They were up about 7.5%. And then the market started to rebound. We had the government come out with some of the fastest stimulus that had ever been created. People got money in their bank accounts. Small businesses were able to get loans. Airlines received federal backing. Our bonds received federal backing, and we kind of came out of it. And then towards the second half of the year, the economy really started to go pretty quickly. Some of the things that we saw were pretty amazing. Were some extreme valuations for certain companies, specifically the NASDAQ, tech companies, kind of some of those newer technology companies. The NASDAQ for the year was up over 44%, and the S&P finished up over 16% for the year. So even though we went through a bunch of turmoil, people that stayed invested, as our clients did, were able to reap the rewards. Disciplined investors got rewarded for being disciplined. We also saw some kind of long-term effects, lots and lots of stimulus put into the economy. We'll talk about that here later. But there will be some long-term consequences of those actions. And then also some kind of extreme valuations, companies like Tesla, Zoom, right? A lot of companies got into the S&P 500 that weren't there in the past. And we saw a few of the companies do extremely well, really pull the S&P 500 up when it comes to the Googles, the Microsofts, the Apples, the Amazons of the world. So overall, the market did really well for the US economy. International is also doing really well, but it turned out to be a good year. A lot of people would have thought there's no way that's possible in March. And then again, as we got to the election and we saw a bunch of change, a lot of media coverage around that, a lot of fear in the media, yet the markets remain positive for the year.
So Sean, you talk a lot about extreme evaluations that we saw in 2020. Talk to me a little bit about cryptocurrency, also known, as Bitcoin. There's a lot of talk around this, especially with its performance in 2020. When does this make sense to have in your portfolio, and does it make sense?
Yeah, so it is the latest buzz. Some of the cryptos are up over 70% over the last month. Pretty amazing. But understand this. There were 4,500 cryptos at the beginning of the year, and there's now over 7,000. So there are no barriers to entry when it comes to creating a cryptocurrency, as well as the Fed is actually talking about creating a cryptocurrency so that they can regulate it. Because right now, the people that tend to be using cryptocurrencies as a medium of exchange are people that are in kind of the black market, criminals, and also people trying to avoid paying federal taxes. And so there will probably be measures taken, as they always have been, to mitigate those risks. And with zero barriers to entry, there's really no kind of reason. You're essentially buying a brand. If you want to buy a Bitcoin, you are buying the brand of Bitcoin because it's really not tied to any commodity or any type of value. And a lot of things could be very expensive, right? You could say, I want to make Lamborghinis a exchange of currency. And although it's really expensive, just as Bitcoin is today, it doesn't mean it's a good way to exchange money. There are and there will be some great things that come from a lot of the cryptocurrencies. One of the mainstays would be the blockchain, and seeing how that can mitigate some, make it easier to transfer titles and make transactions. And a lot of those things will come, but right now, the people that are making money off cryptocurrencies are the people that are making money off the transaction costs. So people that are creating funds, we see more and more ETFs and mutual funds coming out, creating cryptocurrency funds. We see people like Coinbase and other types of exchanges that are making it easier to monetize cryptocurrency. And so a lot of those people are making money. There are a lot of business people making money off the deal. Using it as a value or a place to hold value or exchange a particular means of goods is probably not going to be there long term. If you are thinking about doing it, don't do it. Don't hurt your family, right? We always are okay with, if you're doing the right thing to protect your family, if you're making all the right investments, you're saving money in your 401k and your IRAs, and you have an emergency fund, you have a brokerage account for any of those near-term and long-term expenses, and you want to put 1 to 3% of your money in something really, really risky, like a single stock or a cryptocurrency, that's okay, right? We understand that people like to kind of itch that gambling itch that they have. So just make sure you're not going to do it to harm your family, and then best of luck to you. It's just not something that you're going to see in our portfolio.
John, you talked a little bit earlier about the Fed pumping in trillions of dollars in stimulus, and we'll kind of touch base on that second round that just got approved. But tell us what that does, or what we saw that do to the U.S. dollar. I think some research just got published that the U.S. dollar is down 7% from the beginning of the year. So what does a weak U.S. dollar mean? Is it something that as investors we should be scared of? Tell us a little bit about that.
Yeah, so there will be some long-term negative consequences of us putting all this money. We're essentially paying our bills, not by creating value, not by raising taxes, but by just printing more money. And so when we do that, right, there are more of our dollars that hold the same value across the entire system, and so it weakens the dollar. What that does is it makes our exports really attractive, because people can come in with stronger currencies and buy more of the same goods. So we expect exports to go up and imports to come down, because it's going to take more of our dollars to buy those imported goods. So we see foreign kind of companies doing a little bit better than US maybe over the next couple of years. And one of the reasons to have a lot of diversification in your portfolio. If the US dollar continues to get devalued as it has, as someone who serves in the military still and has gone to Europe during the pandemic, I've seen our US dollars. My Starbucks coffee used to cost me, $1, and now it's costing me $1.67 overseas, because the dollar is no longer as valuable. And it's pretty drastic, right? That's a very quick change that we've seen just in a real life example. But this would be exactly how kind of exports are increased, because people can buy them at a cheaper price, and imports are going to not be as attractive. So a lot of reason to have a lot of diversification internationally in your portfolio. And if we've looked at kind of the market from the bottom of it in March 29th through the end of the year, the S&P lagged behind US small value, international small value, and international stocks. So those, since the bottom of the market, have outperformed the S&P 500. A lot of reason to have diversification in your portfolio.
So the stimulus, tell us, I know a lot of people are talking, should we expect $600, $2,000? What recently just got approved?
Yeah, so Trump made a good push to try and get us a little bit more coin in our pockets. But what you should see is about $600 if you're married filing individually, $1,200 married filing jointly, and then $600 per kid. There are income limits to that, though. If you make less than $75,000, you'll be eligible for the full benefit. And then under $99,000, it starts to phase out over that amount. You may not be eligible for it at all. I will tell you, I did get money into my bank account on December 31st. So it happened quickly. If you're looking to see if you're going to get a stimulus payment, you can always go to the IRS website and see if you get it. There's actually more PPP, small business loans approved. And the only kind of requirement right now that they're saying, and we know this going through the 2020 PPP process, it changes constantly. They made it easier to file if you borrowed less than 150,000. And kind of for this next round, if you had any quarter in 2020 that was less than the revenue by 25%, less than 2019 quarterly revenue, you can and could be eligible for another round of PPP. This would be extremely valuable for restaurants that weren't able to meet their numbers from the year before. I think they did a really good job of structuring it. Rather than just have everyone apply, they said, let's just at least prove that your revenues dropped 25% from our previous quarter. And if you are, you could be eligible for another round of PPP. There's also more money coming for things like the airlines, the travel industry, kind of some specific industry, not necessarily towards the restaurants and bars though, which are really getting crushed. So hopefully they will have another opportunity to get some of that stimulus money. And we'll see how it does. The markets responded very positively to it. Again, throwing all that money in the economy. One of the things that we also see is when we print that much money, when we create that much debt for our country and our interest rate is low, if the Fed does raise the interest rate, they're just raising the amount of debt that they owe to themselves, right? So they have to essentially pay themselves. If they raise the interest rate, then their monthly, quarterly payments to themselves gets a lot higher. And so we could see as kind of an unintended consequences, continued lower interest rates, which is good for borrowing. People that own a home, right? I don't know anyone. We've got clients all across the country that is not talking about how their home is going through the roof. So home values could continue to rise, and that will be kind of a precursor to a lot of high inflation over the next couple of years. Hopefully, salaries go with it, and technology doesn't just wipe out jobs, but we could anticipate some higher inflation over the upcoming years because of all the stimulus.
Okay, so to round out today's monthly Market Insight Live, talk to us a little bit, because we haven't heard enough about it, is politics. What's going on, especially this week? I know we've had a lot of it in the past couple months, but it's kind of bleeding in towards 2021. What's happening in the Senate? What should investors be aware of? Does that impact their portfolio? What's going on at least this week?
Yeah, so in Georgia, we've got the Senate runoff, which will happen tomorrow. They may not have the results as of tomorrow. If you trust results, I don't know where you fall on that line, but we should have some type of news by the end of the week. And really that will control both the Congress, makeup of Congress, whether that's majority Democratic or majority Republican, and therefore make it easier or harder for the incoming president to, kind of pass legislation. And so a lot of eyes will be on that election this week. The markets will be volatile this week, I believe, because of it. But in the end, right, we are at a point where we'll be going through the electoral vote on January 6th, Wednesday. We should be getting at least final approval or at least more scary media talk about how the presidential vote will be finalized. But what we've seen is the markets have continued to rise. Ever since the election in early November, markets have continued to do well. The markets truly don't necessarily care about who's in office. There are so many other external factors that play into how the economy does. And even as we go through this scary week, even as we go through the next couple of weeks, as we go through change throughout the month of January, businesses will continue to create value for shareholders, and that's what drives the economy. There is 100-year data that shows that this is the case. We've seen lots of different elections. We've seen lots of changes in Congress. The market continues to do its thing. So don't make any drastic or irrational decisions based off of some scary headlines or your own personal beliefs in politics. Try and take the emotion out of it and allow the markets to do their thing.
Okay, that's all the questions and topics that we had for this month. Anything else to add, Sean?
Nope, that's it. I know a lot of people got together with family over Christmas and stuff, and so we've seen COVID cases rise and those things. If anyone's going through that with your family, our prayers are with you. We went through it in our household. Me and my wife both had it, and it's doable, right? But we've seen elderly people in our families not do as well. So make sure that you're taking care of one another, looking out for each other, and we'll look forward to talking to you next month.
Thanks, Sean.